Okay, good day to everyone. Sorry that we're running a few minutes late today.
Sorry, hang on a second, it didn't start.
Okay. Good day to everyone. Sorry that we're running a few minutes late. My name is Peter Church. I'm the Marketing Director for the Price Futures Group. The Price Group is an independent broker, futures brokerage firm founded in 1988 and located in the historic Chicago Board of Trade building, where we specialize in futures trading, asset management, and hedging and risk management services. I'd like to welcome you all to today's webinar, Natural Gas, the Shrinking Surplus. The presenter of today's session is Phil Flynn, and for those of you who are not familiar with Phil, he's a senior market analyst at the Price Futures Group, author of the Energy Report, and a contributor to the Fox Business Network. Phil is a well-respected energy expert and is asked to contribute his comments on the energy markets regularly to publications and news sources such as the Wall Street Journal, Reuters, Bloomberg, and MarketWatch. At the conclusion of today's session, we will be allowing time for a Q&A, so please feel free during the presentation to enter any questions you have into the GoToWebinar dialog box on your computer, and we will try to get to them at the conclusion in order. And so with that being said, I'd like to welcome Phil Flynn. And Phil, I'm going to turn things over to you.
Thank you, Pete. Thank you, everybody, for being here today. It's a beautiful day here in Chicago. We're using a lot of natural gas today to keep cool, as has been the case all summer. In fact, something happened last week that has never really happened before, or very rarely has happened before, that in the middle of summer, instead of putting natural gas into storage ahead of winter, we actually withdrew gasoline from storage. I mean, this really marks a historic turning point in the natural gas market, which I think over the next few years is going to have huge ramifications for this market. I think it's a sign that the natural gas market has probably changed forever, or at least in the near term, and that natural gas should be known not just as a heating fuel anymore, but it has now become mainly a power generating fuel. It's really changing the concept of the market and how you have to look at the market. And it's also sending warning signs that perhaps the market at this point is not fully grasping the significant risk associated with this change going into the future. What I'm really saying here is that this drawdown event that we saw this week in inventory could foreshadow a historic change about this market, and a warning sign also that the era of low natural gas prices are probably coming to an end. It doesn't mean prices are going to double today or tomorrow, but this low price energy or natural gas we've seen for some time is probably starting to end. I think we're going to go through some of the reasons why that's going to happen. But part of the reason is not only have we seen a significant drop in energy investment as compared to the growth in demand, I think that when you look at natural gas over the next few years in the next presidential cycle, especially in a Hillary Clinton presidency, that we could have significant political risk ahead on the production front. And in particular, due to market complacency and the lack of significant investment in pipelines and infrastructure, we could be subject to price spikes in the future, in this winter as well, if we have the predictions of a colder than normal temperatures that went before us. Now, for those of you that don't know, traditionally for natural gas, we have had two seasons essentially. We've had for injection season, which is in the summer when we put away supply for the upcoming winter, and the drawdown season, of course, which is in the winter. Now, people who don't understand where natural gas is stored, it's not like oil where you put it in barrels. You have to continually inject it into storage. It's inject caverns. In winter, when there are high periods of demand, the gas is withdrawn. But because natural gas travels through pipelines, during the cold weather, the supply is taken out of storage and the supply is drawn down. In the summer, when the demand for heating fuels are non-existent, we have a tendency to rebuild that supply that we haven't used. In a nutshell, I always kind of think of it, it's like the squirrel who puts away his nuts, ahead of winter. You got to put them away for winter, and then you pull them out in the winter when things are tight. This, of course, historically has been pretty much as reliable as the seasons themselves. Summer, winter, fall. It was gospel. It's basically a market certainty, but because of what happened last week, something changed. The only time that we didn't, in the summer, that we didn't put gas in the storage on record was back in 2006 with Hurricane Katrina. So to see that event happen, it's something that you have to really understand has changed just a little bit. It isn't because we've had a lack of supply in natural gas, obviously. Natural gas, of course, the supplies coming into this winter was at a record high. But what has changed is that we are seeing, of course, this market being used more for electricity. The EIA actually reported that natural gas-fired electricity in the United States did reach a record this year and will reach a record this year. They did previously admit that they would be using about 3.8 million wagonnauts in 2016. That was 4% higher than 2015. We just got a report today from the Energy Information on their short-term energy outlook, and the summer's hot. They said today that the summer's hot temperatures are behind us, and the expected 3% increase in electricity sales to residential sectors compared to last summer. So we're basically seeing higher demand. We have heard reports that demand in some cases was running 10% higher than a year ago, depending on what metric that you want to use. But we are definitely going to see we have seen record demand up until this point in July. And because of right now for the next few weeks, based on some weather forecasts, we will probably see near record demand in August when the weather for demand for air conditioning increases this demand. Now, natural gas, of course, for years, and another change we know, for years was the second fuel when it came to power generation. The first fuel that we used, of course, was coal. That basically changed this year, and for the first time, natural gas-fired generation has exceeded coal generation, and it's basically now providing the lion's share of the demand for electricity in this country. And right now, natural gas is providing the electricity grid this year with 34% of the generation of fuel. Now we're seeing a rising amount as well on wind, and that's taking some of the burden off, but we're also depending less on coal. Their energy mix is going to be less than 30%. But one of the things that we have to be concerned with is that despite the record amount of supply that we saw in the beginning of the season, the electricity generation has caused supplies to fall unlike anything before. Despite the market taking comfort in the fact that supplies are still above the 5-year average, I still believe going into this winter that we should not have that as a false sense of security. I believe that the 5-year average can give us a false sense of security as we head into this winter, because this year's drawdown signals that the benchmark may not be as reliable as we were the last couple of years, because really the last 5 years in general, summers have been cooler than normal and winters have been warmer than normal. We just went through a summer that we all know, or we're not through it yet, that has been warmer than normal, and some forecasts colder than normal, at a time it is becoming clear that natural gas production is questionably, having a hard time rising at this point. It's possible, according to some metrics, that we could see actual natural gas production fall. And basically right now, that's one of our concerns as we get into next year. Consider the fact this year of how much we have gone through because of electricity generation. When we started supplies going into this refill season, which was as of March 31st, the working gas and storage totaled 2.478 billion cubic feet. That was 54% higher than the 5-year average. And that exceeded all records set, the previous record that was set back in March of 2012. And the reason why we put that away, of course, is that we were producing a record amount of natural gas, and despite the fact that we had record demand, we were able to put away a lot of withdrawals into storage because we didn't have the demand kick in. Yet this year, because we had a warmer than normal summer, we saw demand kick in, and the 5-year average for natural gas basically fell from 54% above the 5-year average to last week just 16.4% above the 5-year average. That's when we saw that drawdown in inventory. And why the market did not soar, because it was priced in and the market was looking ahead to the end of the season that says it doesn't matter, even though we're 16.4% above the 5-year average, summer's ending and we still might end the season with a record. The market became complacent and we pretty much sold off after that number. But I don't think that the recent sell-off in price should make us complacent about this, this year or the coming years as we look ahead. We know that the use of power generation hit a record high for power burn. Today, the EIA said the amount of electricity generated for natural gas did reach a record high in July, surpassing the previous record of 2015. Compared with coal in warmer than normal temperatures, it did boost natural gas to fuel 34% of electricity generation compared with 30% for coal. So basically, natural gas is our major power demand. Now, when prices go up, can coal take over? Probably not, because we've taken a lot of capacity offline. But anyway, that 6% BCF drawdown from a year ago is changing. So getting back to this historic drawdown, I think this is a historic event that we have to take take seriously, and we really have to really look at where we're going to be at this next winter. Hold on with us 1 second here. Had a slight problem with that. Now this winter, it's early, but we're starting to get some of the early winter forecast for natural gas and consumption. And as we look at where we're going, it's the possibility of a cold winter here. The National Weather Service this year is saying that there's a high possibility that we're going to have a La Nina episode. And according to the National Weather Service, in the winter months, what a La Nina does is feature a wave-like stream flow across the United States and Canada, which should cause colder and stormier than average conditions across the north, and warmer and less stormier conditions across the south. Historically, for this part of the Midwest, it depends, here in Chicago, will be warmer and drier than normal to start the winter, but our winter will end up being more snowier and wetter and colder than normal. Now, the EIA did predict that today in their report that we will see production fall And they did say today that, that right now, where inventory state, we're 13% higher than we were the same week a year ago, 16% higher than the previous 5-year averages. And that's pretty much, so we're well supplied. And I guess the point that I'm trying to get to is that when we look at the natural gas supply situation, it's a story of record. We have to have record demand, record supply, and we have record amounts of gas in storage. And what we're moving towards, of course, is a winter where we are going into winter with supplies that are not going to be as ample, though at a record high, at a time when we are potentially going into a winter that could be colder than normal, with the retirement of a lot of coal plants that usually have picked up the slack in the past when it's come to natural gas generation. And our concern is, I think I'm going the wrong way here, I think our concern here on the natural gas decline is that because of the war on coal, the winter plans that we have in place in the event of a cold winter have not been tested. Last winter, in response to coal, they have had some winter plans for a lot of companies when it came to storage as to how they would meet demand. And they would have fines for companies that did not raise their production or allow to make natural gas available. And this is, of course, supposed to make gas available in even the coldest of weather. Now, the problem is we really don't know how that's going to work, because we really haven't tested the status quo with a lot of winter. If you look at this summer, probably the biggest surprise that we have seen is on the injection side. Week after week after week, the projections on injections by almost everybody came in far short of where they were supposed to come in. People were not projecting correctly the amount of injection. Now, because we have a lot of natural gas in storage, that might not be as disturbing to some people, but the problem is that this winter, we're not going to have that much room for error. And I think that when we look at the future here for this winter, we feel that there is a possibility for some price spikes. Because of the war on coal and the rise of the shale natural gas producer, we know we have become more complacent on supply. But with the further reliance of natural gas and the fact that we're going to be adding to exports, which are already going to be at the highest level in 60 years, there's a lot of concerns that we are going to have trouble meeting demand this winter. One of the things, too, is that the U.S., for the first time since 1957, is going to be exporting more natural gas than it imports. So this is another part of the changing dynamic of this market that we're going to have problems with as we go forward. The other problem that we're going to have is the retirement of a lot of nuclear power plants. One of the reasons why we've been putting nuclear power out of business is because of cheap natural gas prices. We've seen natural gas plants be retired in different parts of the country, and that is going to have an impact and put a further reliance on natural gas as we go this winter. So we're not saying that right now that natural gas is going to go up no matter what, but we do think if we do get a colder winter that we will be in trouble. The other problem that we've had is this assumption that Canada is going to be able to pick up the difference in natural gas for some time to come. Right now, natural gas and storage in Canada is almost at a record high, but the Canadian Research Institute says that exports for natural gas will drop in the next year, and that we will see a situation where Canada while it has a lot of gas right now, we'll see a reduction in natural gas exports next year. So as we get on a path towards higher demand, while Canada is very happy to give us natural gas right now, there's an expectation that we are going to have a problem exporting gas. And one of the reasons is because they think the U.S. is going to put them out of business. They predict that the U.S. is going to increase gas production over the next 20 years by 72%. And that is a signal to the Canadian natural gas companies that there's a real strong possibility that they're not going to make the investments to meet growing demand, which will in part make a situation where the situation will be a little bit worse. One of the other things that we are looking at is the possibility of a new president in office when it comes to this new election cycle. And one of the things that we are looking at right now, of course, is the possibility of a Hillary Clinton presidency. Hillary Clinton, of course, we believe will be very bullish for natural gas, mainly because her desire to put coal out of business, potentially working towards a ban on fracking or stricter regulations on fracking, and also her dislike for pipelines. And so she's been back and forth on fracking, back and forth on natural gas. I think there's a realization that if she's going to achieve her dream to put coal out of business, she's going to have to rely on domestically produced natural gas during the transition period. But at the same time, she's going to make it more difficult for the fracking. So we know there's going to be more regulations, but we believe that with the Hillary Clinton presidency, there's a strong probability that we will see higher natural gas prices over the next couple of years. Now, warmer than normal temperatures will end this season with near record supplies, but we have a belief, unlike a lot of people that I talk to in the industry, think that we are still over optimistic on the production side when it comes to natural gas. We've already seen a significant drop in investment in the energy industry as a whole, over $1 trillion in capital spending from major energy companies. We believe that that kind of cuts in spending will make it a little bit more difficult to maintain output levels to where they are. We got a report on the natural gas rig counts this week that showed another drop in natural gas rig counts, rigs that are targeting natural gas, which fell to the lowest level since the Civil War. While we did see an uptick in natural gas or oil rigs, which will give us some associated gas, I think the drop in natural gas production basically should be a warning sign that perhaps we're going to see some production problems in the future. We talked to some people that believe that natural gas production could surprisingly fall. Most analysts know that production is going to fall next year. That's pretty much widely anticipated. Many are looking for a rebound in production in 2017. But we're worried that there's a possibility the production can fall faster than people think in 2016, mainly because of the lack of investment in the industry. Now, we know we're going to be adding some new pipelines, maybe some new storage situations that are going to be coming out of maintenance, which could add to the supply in the short term, but we're still concerned about the lack of investment. One of the things that we are looking at, of course, is the possibility of aging pipelines and infrastructure. Right now, according to EIA data, we're losing almost 7 BCF production a day due to these aging pipelines just by the loss of gas because of the lack of the ability to capture all that gas. We think that number could fall off here a little bit. So there is a possibility that we can see production of natural gas start to fall faster than people think. There's some people in the industry that thinks, to quote a term, that it could fall off of a cliff, especially if we don't get that investment happening. So again, this is some of the things that we're looking at here as we get here. This is a little picture of the natural gas rig count. As you can see, it continues to fall, and that is the lowest level we have seen since the Civil War. Now, that can be misleading, of course, because we know the rigs are a little bit more efficient than they were during the Civil War, but definitely one of the concerns that we are having. Now, the question is, because this is a market that's going to be really based on weather, but you also have to look at the fact that we are changing the power mix, the megawatts being added to natural gas. Natural gas is going to continue to dominate the power generation. It's going to be the main fuel for power generation. And while weather is going to have a major impact on this, we also have to take into consideration natural gas power as it continues to become an electricity fuel. And so we are going to see the increased risk that in certain parts of the country, at times, until we test this area, that we could see some potential power outages during peak demand periods this winter. So that is one of the things that we're going to be looking back here as we go forward in the future. So we basically, in summary, I'd like to say that there's a high likelihood that this winter, especially if these predictions of winter become true, that we believe that there's a high likelihood of higher prices this winter and the possibility of price spikes as well. We think the next couple of weeks, when we look at the injections throughout the rest of August, we believe that those injections are going to miss what people are going to look at. So I think even though we're going to start near a record, we may fall below 4 trillion cubic feet at the end of the refill season. And I think that might be a wake-up call as we head into winter. Because if we go back to the polar vortex year, we went through a lot of supply very quickly during that period. If we get that type of weather or colder than normal winter, I think people will be surprised how tight the market may get. We also are seeing signs from people we talk to in the industry that the numbers from the EIA may be on the high side, and that they expect, from what they see, the production may be falling faster than people think. We think that if we get weather events, we see the possibility of significant spikes in Henry Hub, but as well as specific spot markets around the country. We know we've added some more pipelines to the Northeast that desperately needed them, but we still haven't really tested that with the cold, wet weather, and that can change. I also want to talk about the natural gas and market dynamics. The complexion of this market has changed. I don't think that the drawdown that we saw in inventory this year is going to be the last one we see in the summer. I think this is going to become a more common event in the future, and I think it's going to be because we're going to rely more on natural gas in the future, not only for exports, but also for transportation fuels, and mainly power generation. And I think it's going to take some time for the market to play that out. But still, going into this winter, you're probably going to need an event to get things going. You're going to probably need that cold weather to actually develop. We know that when we saw the drawdown, that was the peak of the market this summer. We may try to revisit those areas later, but going in the shoulder season, it's getting harder and harder to rally. But we want to use this recent market weakness. We already know that the spread in the winter months have gone up a little bit, but to put on different strategies to protect yourself against upward moves in the winter. We think that this winter could see some of the most significant upside spikes, risks that we've seen in a while. And so we are, for our clients, recommending not only options, but futures covered with options with different types of strategies. So for example, we're going out into the curve, buying calls, putting on bullish option strategies, but also looking to buy futures and protecting them with options. Another popular thing that our clients like to do is to sell out of the money puts and write calls against it to buy calls, subsidizing those with the money collected from a short put, and that is a good way to look to buy it. I think I'm going to leave it open up to questions. I'm already seeing some questions come in, so should we go right ahead to the questions? All right. Phil, hello Phil, hi. How can you predict how rapidly natural gas supply capacity will recover in response to an increase or a decrease of natural gas storage? That's from Fred. Fred, it's difficult to project, especially with the cutbacks in capital spending. I think it will be slower than people think. We do know that right now there has been some spending on some pipelines and some storage. We know in California they had that storage plant that was closed out in the canyon there. That's going to be brought back on. But obviously, I think you're going to have to see prices are sustainable because what we've learned from a lot of past run-ups, money spent was money wasted. I think it's going to take some time, and I don't think you'll see that happen until late 2017, and prices are going to have to stay up. I'm going to move on to the next question from Scott. How do you measure a lack of investment? Well, basically, when we talk to the people in the industry, they have taken basically control of how much has been announced by the different energy companies over the last year. And right off the top of my head, I have to remember the name of the company, but I can't right now, but I'll be happy to email it to you. But basically, the company that measures cutback capital spending in energy worldwide since the beginning of the price sell-off has cut back over $1 trillion globally in capital spending across the board. We do know in the fracking industry there's been major cutbacks. You can look at that by the evidence and the drop in rig counts that we've seen over the last 2 years, the bankruptcies, the possibilities. I don't think there's one company in America in energy that hasn't made some significant cutbacks, whether it be on the exploration side or the investment side. They've had to react. Now, admittedly, a lot of these producers have become leaner and meaner and been able to produce more. You've got to be amazed at the U.S. natural gas producer, how they've been able to keep production where it is, considering the drop in price. But the question is, how much blood can you squeeze out of the turnip? But I'll give you the name of that company that mentions those record capital spending cuts. We'll move on to the next question. How do we trade these ideas? Futures and options. It's Hollis. Hi, Hollis. Basically, it depends on the client. And if you have deep pockets and a long way, I think that the future at these levels from a historical viewpoint, I think if you can buy and hold, it's a good area to do it if you're well capitalized. I also think that the thinly traded back month options are a good way to go if you can get the market to make you a market. And once you start getting to size, you can start buying some of these longer term options. So it really depends on your risk tolerance, and every story is different. I have one from John. I am a natural gas producer. No producer wants to drill and make a gas well to sell gas for 275 FCF. You are preaching to all my other clients, John. Absolutely. Nobody does. You're right. And that's why we're seeing a reclassification of a lot of these rigs. Everybody says last week, look, we added 7, rigs. I don't remember the exact number. But then on the downside, we lost how many natural gas rigs. Some of those rigs were reclassified, and you're right. Nobody's going to want to drill for 275. And that's going to be a problem. And I think that's where we're going to see that production fall. A lot of the productions, John, are smaller producers like you. They make up the bulk of the natural gas production that sometimes gets overlooked in the overall numbers of smaller producers that add, a valuable amount of supply. If other producers are thinking like you're producing, if thinking like you are thinking, we are going to see production fall faster than people think. You're welcome, Scott. All right, let's see. We'll keep moving on. Is the UNG ETF a good way to play bullish natural gas outlet? I believe that, that's Robert. Hi, Robert. I believe that you do have some rollover risk with that commodity. As everybody knows, it has some inherent problems. But I believe that over the long term that the UNG is saying, in full disclosure, I own UNG in my own personal retirement fund. I don't play it actively, but I have my hand in it. Do I like Cheniere Energy? I normally do not comment on stocks per se, but let's face it. They're at a historic turning point in this country. They're doing this LNG. It's been a rough go for them, but they're finally getting that export out of the country. So from a long-term play, I don't normally recommend it, but I like what they're doing over there. Is that a good way to answer non-committal, committal? I think we're kind of running a little bit short of time. Obviously, there's probably going to be a few more questions, but I would be happy to answer all your questions if you'd like. My email address is pflynn@pricegroup.com. There's my contact information, and I'll be happy to answer all your questions personally. And I want to thank you. It was a very good turnout, a lot of people here today, and please feel free to call us with any questions that you might have.